Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Happy New Year, everybody, especially the Bears, as we wake up here and overnight, over the weekend, a huge gap down, and this is probably the biggest day I've ever seen for DGAS. We had, what, up 30%? That's pretty insane. But in terms of anticipating this move, very difficult. We had a very clear lower high, higher low pattern in terms of consolidation. This is the hourly chart, but there were no red flags in terms of volume or anything that indicated this move was coming. I had someone say that the daily chart had a MACD divergence, but I just don't see that. I asked them to show it to me on a chart, but from over the weekend, we had 2 days of consolidation, still maintaining higher lows, and the MACD was still positive, and the bearish cross occurred once the dump had already started. So looking at the hourly time frame, I guess the MACD divergence you could look at here was the fact that it was a lower value here as we hit a higher high. That would be the only MACD divergence that I would see, but again, that wouldn't be enough to have me take a bearish position over the weekend. Either way, the hourly chart, big gap down, and once we broke this low, well, we broke it by gapping down, and then it was very clear that the bears were in control. And you can see where we rejected here, this line. That line comes from the daily uptrend line that was lost. And you can see I had this uptrend line hitting these higher lows. So interesting to see that that gap down broke that support line, and then we rejected on the back test as resistance and then hit lower lows. We did see a clear bullish reversal doji, but very little followed through for the bulls. The RSI has been oversold. Look at that. Since 2017 began, the RSI has been oversold on the hourly time frame. 4-hour chart, still no sign of the bulls, no clear bullish reversal candlestick. We're oversold here as well. And I've got this support highlighted at 330, and you can see it here on the daily time frame. We consolidated and bounced off of 330.02. Then we dipped below it to 329, but closed above it. And then we dipped even lower today, down to 3267. But again, we're closing above 330. So that line of support is still here. If it breaks, we're going to start filling these gaps. So this is pretty much a must-hold level for the bulls going forward at 330. Looking at the weekly time frame, obviously it's a very bearish start to the week. Big bearish engulfing candlestick. We did have a bearish reversal spinning top candlestick last week, and cannot be more clear in terms of confirmation than we have here. One trading day, we've got half of last week's total volume already in just 25% of the amount of trading. So it's all about 330 support. If we lose it, we're looking down at this gap here at 325. That would be the next level. And in terms of resistance, we're looking at the highs of this bounce attempt, which right now, 3361 is the high of this bounce attempt. If we can get back above that level, we do have a higher low and a higher high on this short-term oversold bounce. But until that happens, the bears are still in full control, and it looks like we're heading back down to test 330 support here yet again. So a wonderful start to the year for DGAS. Let's see this move. Huge gap up, and bulls held their gains above the upper ball, or above the middle Bollinger Band, I should say, and huge bull volume. Very clearly still in a downtrend, though. We have to break the high of December 20th, 478, in order to break this lower high pattern on the daily. And we look at UGAS, big dump, and we did lose some support here on UGAS. We do have a lower low now. A little bit of a lower wick showing bulls buying the dip, filling some of these gaps. Let's check these levels on the weekly. So UGAS, look at this resistance at UGAS up around the $50 psychological level. It closed above it one candlestick, but clearly resistance in 2016 around the $50 psychological point. So we rejected from that level. And DGAS on the weekly, very clearly still a bear in the long term, and time decay is a factor there. So we'll see if we get this oversold bounce overnight and into tomorrow morning. All about 330 support. Thanks for watching. Happy New Year, and we'll see you tomorrow.